No, we're not. We're going to. Yeah, we're going to go now. Richard's here now. I think we probably best stick to the agenda, wouldn't we? Sorry, Richard. I know you're here. And it's being live streamed. Members of the public might be tuning in for a specific item. We live? Okay to go? Okay. Okay, welcome members. Apologies, we are a little bit late starting our meeting today. I'll go straight into the meeting agenda then for the meeting of the Economy and Development Select Committee. Just prior to doing that, it's probably best we do introductions for the purpose of the live streaming. So I'm Councillor Sarah Jones, Chair of the committee.
Sarah King, Democratic Services.
Hazel Eilert, Scrutiny Manager.
Tepil Howells, Head of Community Delivery.
Ben Winstanley, Estates Manager.
Councillor John Prosser, Committee Member.
Councillor Douglas Edwards, also Committee Member.
Councillor Bob Hayward, Committee Member.
Councillor Dave Evans, Committee Member.
Councillor Alan Wintle, Committee Member.
Councillor David Dovey, Committee Member.
Richard Jones, Policy Informants Officer.
Great. Thank you very much, everyone. So moving to agenda item 1, which is apologies for absence. So none received. Item number 2, declarations of interest, as and when. Okay. And then moving to item number 3, which is to confirm and sign the minutes of the previous meeting. And that's 4 sets of minutes to go through today. The first being the 16th of November, and that was a special meeting. So members, are there any issues with those minutes? I'll take them as a whole rather than going through them by page. Sorry, Councillor Evans?
Yeah, can I suggest, Madam Chair, we take, unless any member got anything, can we take them in block, please?
No, I'd like to bring up November 26th minutes, please, Chair.
Okay. So we'll go through them singly, but we'll take them as a whole rather than go through each page separately. So we'll start with the 16th of November then. Any issues with those minutes for accuracy? So we're happy to sign those minutes off. Okay.
Second.
Okay. Agenda item, sorry, not agenda item, minutes number 2, which is the 26th of November. Councillor Hayward.
Yes, Chair. I think I'm looking at the item member scrutiny, which is page 10 on the paper copy, I think. And I think we need some clarification there. There's a statement that says the strategic sites did not attract SIL, but they only attracted Section 106 money. We had a seminar last week where we were told categorically that sites attracted SIL and 106 monies. And it was queried, but we were told, no, it definitely did. And I think that we need to check that before we progress the minutes. Because I remember I did actually query it at the meeting on the 26th, and the officers quite clearly stated that 106 monies, you either had 106 monies or SIL. In particular, we were talking about Wannister Road, and we were told that Wannister Road would not have any SIL money, it would only have 106 monies. So I think we need to check it before we sign those minutes, Chair.
Okay, so if we capture that then and ask that question of Mark Hand prior to signing these minutes off, is that what you're...
Yeah,
the minutes are correct.
I suggest that we move the minutes and then subject to Bob's raised. Okay.
Yes.
Okay, I'm happy with that, Chair. Can I also bring to people's attention the bottom of page 11, where a member warned against the focus on income generation rather than core services. It's relevant to the meeting we've got later on.
So it's just a case of flagging that up. Okay. All right. I've just got one thing on there, and that's scooter aid, just to raise in light of the previous full council meeting, and that's that we'll need to make sure that's on our work programme for an update at a meeting within the next month or two, I would suggest. But we'll make sure that comes up under the work programme later today.
Again, just a reminder, Chair, we were told in by Peter Davis in October that the platform would be up and running and ready for member approval by Christmas. So that report should be ready now. We shouldn't have to wait too long for it.
Okay, thank you, Councillor Hayward. So in terms then of these minutes, are you happy to move those? Okay. The next set of minutes then, please, which is the 16th of December. That was a special budget meeting, a meeting of all 4 select committees to look at the budget. Any issues with those minutes? No. So move those. Okay. And then the final one is the 5th of January, which was the call-in regarding the old County Hall site. Any issues with those minutes?
The only thing I'd like to say there, Madam Chair, we did ask for, they did offer more information. Perhaps I've overlooked it or what, but I haven't seen that information. And then it went back to Cabinet, and I don't know if they had that extra information, but they still went through with the same decision.
I believe there was an email trail that went back and forward between those that signed the call-in with requesting that specifically, and that further information, I believe, did come forward through that email train. Hopefully it would have been copied in, but if you wanted that to be resent, then we're happy to do that. Okay. So any other issues or anything else to raise on those minutes, or are you happy to move those? Move? Okay. Okay, so moving on from the minutes then to item number 4, which is the event strategy. Unfortunately, we don't have this item coming forward today. It's something that we've been awaiting for a while now, and I know members are very keen to have an opportunity to scrutinise this, particularly in relevance to the Eisteddfod and Velathon update. So I think I do understand there is an issue here with officer being ill, so unable to get the report to us on time. But I think we probably will express slight disappointment that it hasn't come forward given the timescales that have been allowed. On that basis, we will want to see this at the very latest now at our next committee meeting, whether that be a special meeting, and bring it forward to that one. And we'll discuss that then as work it programme. Councillor Prosser?
Does this mean that the projects are on hold until there is an officer to do the job? Because I would have thought somebody knows what's going on.
No, I liaised with the officer, and unfortunately, because he hadn't been well, he just hadn't managed to get his report to us on time. But I know that it's ready, and we did discuss in the pre-meeting that we might be proposing a special meeting for the business, and we can add it to that agenda.
Okay, Councillor Evans and Councillor Edwards.
Yeah. Can I ask then, through you, Chair, that we can have a report put in front of us today, even if whoever the officer is?
I believe it was just a case of missing the report deadline for agenda dispatch and was unwell.
Has this illness been a long illness, or is it just happened? Because I just cannot...
Prolonged.
Councillor Edwards.
No, Mrs Hills-Hals gave us a very comprehensive report on the Eisteddfod yesterday. Mr Brinicum, perhaps you would like to elaborate.
Would that be in the context of what would have been presented? I mean, it's difficult to look at that as a specific agenda item if the author of the original report isn't with us today. But do you think there's merit then in having an update on that now, members, or is that something we need to...
Well, I certainly would not like to embarrass that at such short notice.
Okay, so in terms of Councillor Prosser?
Yes, I would welcome literally a 5-minute maximum update for the benefit of members, so that when the report does come, we've got a bit more background information on what's going on.
Okay, and it's on the basis that it won't, whatever Deb says now is not about scrutiny, it's literally just an update. And to bear in mind that we're going to be having that special meeting quite shortly, so it won't be long for us to hopefully wait now for that event strategy to come in full. But over to you, Deb.
Okay, in terms of the Eisteddfod, I know Ben will jump in if I forget anything, but in terms of the Eisteddfod, we managed to get planning consent, so we were successful in achieving planning consent at the end of last year for the main mice site, which will be on Castle Meadows. We've now agreed that the Mice B site will be at Llanfoist, at the Racecourse Farm, which is in the council's ownership. Now, Mice B, for those of you that don't know, is where the youth go. They have their own marquee and they also have their own camping facilities. There will be a park and ride system set up to manage between all of the sites. The caravan site will be in Llanover, and we are currently identifying and working with owners of 3 park and ride sites to pick up cars coming in all directions. They haven't been firmed up yet because the Eisteddfod need to enter into legal agreements with the 3 owners. They're not in our ownership. So we're not releasing the names of those sites yet until that's actually done. Once those park and ride sites are established, the Eisteddfod will then tender the park and ride scheme, which will pick up visitors from those 3 park and ride sites, the caravan camp site, as well as Mice B. We have had concerns expressed to us around pedestrian access from Llanfoist into the main Mice site. We will be encouraging people to use the buses and not to walk, to mitigate the impact of people walking over Llanfoist Bridge. Clearly, we can't stop people doing that, but by making the Park and Ride scheme very easy and free to access, that's what we'll be attempting to do. In terms of public access, we've also identified that we need to put some shuttle service from the train station for those who need of a vehicle, disabled access, etc. And that again will be included as part of the Park and Ride scheme. In terms of the main Mice itself, we have made a conscious decision that our presence will not be about promoting council services. So it won't be a corporate, this is how well we collect your bins, etc. It will all be about promoting Monmouthshire as a tourist destination. We have secured with Ben and Dan a really good proximity on the site. It's in a very good space, and that will all be, as I say, around encouraging tourism. It's going to be an active space, so lots of activities to bring families into that space. We're even talking about a miniature golf course to get people doing things. So that will be a very active space. In terms of setup, that will start around the beginning of June. They will not finish on site until towards the end of September, which obviously raises an issue with the food festival because they normally use Castle Meadows as a park and ride site. And I know Ben and colleagues have already raised that with the food festival. So we are meeting regularly with the organisers of the Eisteddfod. We have a really good working relationship with them. In terms of community fundraising, their current total is £112,000. Clearly, they have a target of £300,000, and we are working with those, Dan in particular, around how we can support some of the fundraising groups. Some have done very well, like Esgyrn Abergavenny, other areas not so. In order to help them as well, we are organising, or Dan is organising, the 3 choirs. Well, we've actually brought 3 choirs together, and that will be a concert to be held in June, and all the proceeds of that will go into the fundraising. In discussions with the Eisteddfod, the Vale of Glamorgan were in a similar position when they had a fundraising target, and they managed to achieve their fundraising total as well. So we remain optimistic, albeit that we do have member approval to underwrite any shortfall on that 300,000. So that's where we are with the Eisteddfod.
Okay, members happy with that? And obviously we'll await the further. Thank you, Deb. Very impromptu. But yes, thank you very much for that update. And as I said, we'll have an opportunity to explore further. Councillor Prosser?
Yes, on behalf of the committee, I'd like to say thank you very much for what you've just done, and it puts us all in the picture, and it's all looking good for the Eisteddfod. Thank you.
Thank you very much. On events? Yep. Oh, Balathon, yeah.
Okay, if I just do a very quick update on the Valathon, just so that you're aware. Run for Wales, as you know, have taken over the management of the Valathon this year, as opposed to Lagardère, who are the main sponsors behind it. There is a meeting that has been set up for the 22nd of this month here at 6:30, where Run for Wales will be coming here, and we will be live streaming it, so that we've invited community councils and town councils to come and raise their issues and their concerns with Run for Wales at that point. We have a number of different groups now set up, working with Run for Wales and with Lagardère and Welsh Government, who actually chair the steering group because of the concerns that were raised by all of the host authorities. The next meeting of that is tomorrow. They will be releasing the route. I believe it's on the 22nd, so the route will become available to everybody at that point. We are directing queries that we're already getting back to them. There is a change in the route for Monmouthshire because we took on board some of the concerns, and members that attended the member seminar will already know what that route is. There will be a new going out shortly to, I think it's over 17,000 residents in Monmouthshire, giving them initial information on the Valathon about when it's going to happen, so we start getting people aware of the dates. There will be a second newsletter that will come out approximately 6 weeks before the event that will actually give all of our residents far more detail on what the road closures, etc. are going to look like. Run for Wales are very aware of all of our concerns around road closures, around minimising road closures, and around creating some emergency local access points during the event itself. So they're working on that at the moment. In terms of the route ourselves, as I said, it's changed. What we are currently looking at as well is a feed station to try and get more active involvement in Monmouthshire. We're looking at hosting a feed station, possibly in Twine Square, as long as that can be achieved in terms of all the organisation that they need to do in that area. But we're certainly looking around the Esk area for the first feed station on the mass participation route. More information will come out now as it gets closer and closer to the event, but I do strongly recommend that if you do have any concerns or want more information, you attend that meeting on the 22nd.
So that's the 22nd of February is the next meeting, open meeting, and that's town community councillors, and obviously us as well as county councillors are able to attend that.
The time of that meeting?
6:30. It will be live streamed as well.
Okay, another very helpful update. Members happy with that? Anything to raise here? Yep. And again, we'll have further details, and I'm sure from Dan at the next meeting. Brilliant. Thank you very much, Deb, for that. So moving on to agenda item 5, which is the investment property paper to conduct pre-decision scrutiny on the business case for the acquisition of investment properties. I believe we have a presentation from Deb and Ben, and so I'll hand over to you now prior to us asking questions.
Okay, thank you, members. As you'll be aware, in a number of the budget rounds, a number of times it's been expressed, why are we not, as an authority, investing in the acquisition of properties that will generate a rental stream to the authority as well as capital appreciation? What you have, what you have in front of you is our first draft of what that strategy could look like. It's not finalised, and there are lots of areas in that draft that we need to spend more time with our finance colleagues trying to ascertain the best route forward. So what I'm going to do today, with Ben's help, is take you through what we've currently drafted in terms of that property acquisition strategy, to get your feedback, to get your views, where it looks right, where it looks wrong, to help us then formalise what this strategy looks like. So in terms of the purpose of the strategy, clearly it's for generating financial income. Now, there's the obvious revenue stream, so that's the rental income. We're not looking to acquire properties that are actually going to be used for operational purposes. This is purely acquiring properties that will have sitting tenants generating us a net rental income. At the same time, we will also be getting a capital appreciation. So as we buy an asset and we get the rental income, that value of that asset will increase over the period of the 20, 25 years, whatever the borrowing turns out to be. So the strategy is providing a framework around how we would look to acquire these properties, what properties they would be, how we determine whether they're a correct investment or not, and I'll go into that at the moment. And in terms of objective analysis, all properties are individual. We're not saying in this strategy that with the sign-off of this strategy, we'll go out and buy a load of properties. That's not what we're saying. What we're trying to do is provide a framework that everyone's comfortable with in terms of the process that we will use to identify properties, take them through a business process, and then take them through the member approval process. Okay, Ben. In terms of the proposed within the strategy, what we've done is talked about a eligibility criteria. So we need to put that framework in place because we're going to get a lot of properties in the marketplace. So how do we decide which ones we want to take forward and which ones we don't? There are 7 criteria here. They may change, they may stay the same. The ones in bold are from our discussions with our finance colleagues are the minimum criteria that we would need to satisfy. Now, you will see at the moment we have in here that we want to get a net return of 0.5% above the prevailing gilt rate. We'll go into that in a minute. That was to try and find some objective tool that enabled us to analyse what the financial return on our investment would look like. Debt repayment, again, we've talked about 20 years. What we're anticipating is that any property that we acquire, we were going to have to borrow and fund that cost. So how long are we going to evaluate what that debt is going to look like? So that will determine what the interest rate looks on the borrowing. It also then determines what our rate of return is on our investment. Some of the other ones are around wider benefits to the community. So we may be looking at a parcel of land that we could acquire that we own the property next door to. So by putting the two together, we create a development site that yields a higher capital value. So there are lots of examples. Enable service delivery to release an existing holding. Well, that might well be that we identify that 2 holdings that we currently have are no longer fit for purpose, but we could go and acquire another one. And by doing that, we can yield 2 capital receipts by selling 2 holdings that we already have. I won't go into all the other ones other than to say, obviously, we don't want to conflict with our own local development plan. The other one you'll see there is commercial acquisition should normally be pre-let to a tenant with a strong covenant. What we mean by strong covenant is that the tenant occupying that property needs to be a well-regarded, financially stable and secure tenant. Clearly, the less secure they are, if they're not a nationwide company or a national company, that then reduces the strength of what we call the covenant. The best investment for us would be to have a property that has a 25-year fully repair and insuring tenancy with a tenant in there who is well regarded and is not likely to default. That's the ideal scenario. They don't come up very often. So at the moment in time, we've just identified 10 years as our minimum. And we want full repair and insuring because that then means as an authority we don't have any costs, holding costs for holding that asset. Okay. Proposed acquisition process, from your perspective, this is how we're saying we would look to acquire those assets to make sure that members feel fully engaged in that process and that you're not divorced from that. So we would, in the first instance, identify an asset. That may well be that we identify it ourselves, or it may be that someone in the marketplace brings it forward to us as a possible acquisition option. We'll put all that together and we'll assess it in the first instance against the criteria I've just shown you, 1, 2, and 7, which were the financial criteria. We will then put together, if it meets those 3 criteria, a business case, which will include lots of details around the holding cost, the strength of the tenant, whether there's structurally sound, whether we think there's development value, all of the issues that actually look at what the costs are going to be, the holding costs, and what our income stream is likely to look like over the period of the borrowing. We will, from that, be able to analyse what we consider to be our internal rate of return. So all of that will be in the business plan. We will then work with our finance colleagues to establish whether we think financially it's a viable proposition or not. So will it give us a net rental income? So after we've paid the borrowing cost, from that rental income that we get back, is that a net or a deficit position? Because clearly we don't want deficit position, we want net. As well as that, we will look at what the capital appreciation of that asset will be over the length of the borrowing. Assuming finance are comfortable with the business case that we have, and we are comfortable that it meets our criteria, we would then discuss that with our cabinet member for resources. And if everyone's in agreement, we would then put that through the cabinet process. And if cabinet recommend it, we would then go on to full council, because clearly it's going to result in an amendment to the capital programme, so it would need full council approval. So that's the process that we are proposing at the moment. In terms of risks, clearly there are risks around acquiring properties. You have market fluctuations. We all know that the market is cyclical. Very much so in the residential market, and even certainly as well in the commercial market. So we would need to have regard for that in terms of the properties that we were looking at. So we would probably not expose ourselves to just one sector of the market. So we would be looking at retail, we'd be looking at office, and we would be looking at industrial. So they're the types of the sectors that we're looking at. But clearly there is a risk. None of us have a crystal ball. We don't know what the market's going to look like in 10 years' time. Liquidity. Everybody knows that to try and get your money back, if you need it quickly from property, is very difficult. The nature of these assets is it's probably going to take at least 6 months to dispose of the asset if we need to before we get the money back. If you were going to simply invest your cash into shares or gilts, it's much easier to get your money back, but of course you don't get the capital appreciation. So at the end of our borrowing period, you have the whole capital value of that asset as well as the rental stream that you've achieved over the 20 years. Tenant risks. I've just explained to you that, depending on the strength of the covenant, is the risk that we are exposed to. We don't want tenants defaulting on us, not paying their rents, not observing their repairing clause, or worst case scenario, going through, and then we end up with a void that we then have to cover. We have empty rates costs, and we lose the rental for that period. They're all risks that we will carry. Market sector. The yield will change. So the yield is a return that we get on our investment. So Ben will go through that in more detail in a moment, but the higher the capital value of the asset set against the rental income, the lower the yield, because the lower the return is on the borrowing. But that actually also gives you the most secure investment, because the lower yield properties tend to be prime retail units. That's a lot of information. So to try and make it a little bit, explain it in an example term, we've actually worked some things up to try and explain to you what we mean by yields, by net initial yields, and how we could possibly calculate which properties we would look to invest in.
Okay, over to me. Right, so here's an example of a property which I believe has been sold now, but it's just to work through the scenario. This is the kind of thing that we could look at. It's based in St Mellons, Cardiff. It's a 9,000 square foot modern office. Yeah, oh, I thought you were. It's currently let to a technology company. We haven't got much information on their covenant, but obviously we would look at, they've got some accounts that can be provided as part of these details. And the freehold investment is for sale. There's a 10.5 year unexpired full repairing and insuring lease. So across to income, that tenant would pay us £115,000 per annum. The outgoings that it would be set against would be a capital purchase price of 1.28 million. No. Purchasing costs. So what I mean by purchasing costs is things like legal fees, stamp duty, anybody that we get to represent us, etc., etc. They are nominally accounted for within, mostly in the marketplace, to equate to about 5.8% of the purchase price. We then look at debt repayments. We've worked out on 20 years, we'll come on to that a little bit later, that the borrowing would be 82,242. That's using the Public Works Loan Board rate, and that's something that finance are okay with us using. We've used in the past for other business cases. And that's spreading the debt over 20 years. That gives us a surplus income of £32,000 a year. And as we say, it was let on full repair and insuring lease, so we wouldn't have any of those issues to take account of. So non-recoverable outgoings, as I just alluded to, there isn't any of these, but just to highlight what they could be. When the property's empty, there could be empty business rates. There's things that service charge costs, or things that we would have to look after in between. Sometimes on sort of multi-let buildings, there may be spaces which become vacant in between tenants, say there's 3 tenants in a building, if one of them becomes empty, we would have to fund the service charge for that empty building, albeit reduced at our rate. There's marketing costs for reletting, the agency fees and any management fees, sending out invoices, etc., so we'd have to cover that. Gilts was seen as our a good reference to use. We're not so sure about it now, but the gilt rate is essentially what the is an indicator within the industry, which is a safe investment. It's government debt. It's currently around about 2.1%, and it represents something that you can definitely get a return on. So that was seen as a good way of highlighting what the minimum return would have to be. That's what I was looking for. So borrowing, as I said before, financed through the Public Works Loan Board and borrowed over a period of 20 years. After the end of that 20 years, it would be fully repaid. So this is my reference yield calculation. We suggested that the gilt rate currently at 2.1, as Deb alluded to earlier, the liquidity of property is such that you would want a premium over that because you'd be able to pull your money straight out of a gilt. But with the property, you'd have a period of marketing and costs associated. So we've suggested that a 0.5% premium over that would give us a minimum return, internal return of 2.6% per annum. So I don't know if this is visible, but essentially in this case, the purchase price would be too high. The rental income would be 115,000 per annum. The purchase price would be 1.28 million. The purchase cost would be 74,000. So that means our acquisition cost would be a total of 1.354 million. The borrowing costs set against that would be 82,000, giving us a net profit of 32,000. That would leave us with a net profit percentage of 2.42%. So just working that down, using the target yield of the gilts plus 0.5% premium, we then derive a purchase price of 1.259 million. So that would be the level that we would be interested in, or we could, further, we would go back to the agent at that point and say, if it's definitely 1.28 million, then we are not interested, and we won't work up a case. If there is some movement, then we can try and move up the case. So, issues to be resolved. These are the questions that we need to work with our colleagues, yourselves, and internally on. Do we use that net initial yield with gilt plus 0.5%? Do we set a minimum internal rate of return or a threshold at all, or do we look at this as an individual business case as they come through? Are we only interested in properties in Monmouthshire? And should the borrowing term be 20 years? Over to Deb.
I think the key thing I really wanted to pick up on this, using the gilt. We've done a couple of worked examples now.
Sorry to be a pain. I think Councillor Potter just wanted to come in quickly on Ben.
Ask a question when he finishes.
Oh, when he finished, okay.
Okay.
All right, sorry.
The one thing that we've done now, by working through a couple of examples, is we've actually demonstrated that by using the gilt rate, we will exclude some elements of the market, because what that will do is exclude prime retail units. Now, while we've looked at other examples of authorities where they've done it in England, because they're already doing it in England, the standard approach used as the first filter to determine whether you investigate that property further or not is the net initial yield. And the net initial yield is simply the purchase price and the borrowing cost set against the rental value, and that then gives you the percentage of the yield. So after doing a couple of test runs, what we think is that the gilt proposal that we've currently got in the strategy is probably the wrong approach, and that what we probably need to be doing is using the net initial yield. And that's what we're going to be working through with our finance colleagues now. But that's where we currently are, and those issues that Ben's just raised at the bottom are some of the issues that are still yet to be bottomed out before it goes any further.
And what figure would you have now?
In order for it to be catch retail properties, you need to be looking at net initial yield around 4.5 to around 6.57%. So we would be setting it at a minimum of 4.5%.
Okay. Thank you both. That was a very helpful presentation. So we've got the two papers before us today, as well as the presentations and the questions raised within that, so the cover paper and the actual strategy itself. We're being asked to review the policy that's being presented for us prior to it being considered by Cabinet. So I'm sure that both Ben and Deb would welcome your comments and questions now to hopefully then reflect on that as when this paper goes forward to Cabinet. So I know Councillor Prosser had a question he wished to raise first, so I'll go to him and then to Councillor Hayward.
I got two questions, really. One is the preemptive. Before this, you're asking us to look at a scheme to raise money for the council, yeah? Objective, raise funds for the council, yeah? So we can plough that into lots of other things. So the thing I would like to do, obviously, it's good if you want to raise money. I agree with all that, right? But our job here today is to challenge you and say, why are you doing this in this way to this particular aspect? So as a scrutiny committee, I would like to see evidence of other ways of raising funds. And why is this one better than any of the others? Why aren't you investing in Formula One cars? Or why aren't you investing in new leisure centres that you can rent out? I don't know, whatever, right? But there's lots of ways to raise money in this world. And as a scrutiny committee, we've got to come to a conclusion. Yes, that's the right thing to do. Yes, that's the way to do it. Yes, the risk is right. So I'd like to know, well, I'd like to have seen a paper, if I like, comparing other versions of raising funds and how this one compares favourably or not with the others, right? That's the first one. And the second question is on Ben's presentation, and a thought just came across my mind. You've got somebody in this building unit that's renting it and is going to give us rent, right? Now let's say that someone is trading well, great accounts, so no reason to, but their parents are in Germany. And all of a sudden, we have Brexit. I'm not saying we will, but what if we did, right? And their parents say, sorry, you can't trade there, you're going to do it from Germany now. So overnight, they disappear. Are we left holding the unit then with no income at all? In other words, it's a detrimental scenario. So, you know, that's just something that could happen. I hope it doesn't, but it could, you know. So that just crossed my mind. It's great to see, well, they're a viable company. Yeah, they got good accounts. Yeah, everything's fine. Yeah, you're going to have rent. And the odds are, yes, you're going to be okay. But there's this little thing in the back of my mind that says, well, what if it all went ape? I mean, you've got all these big companies that all of a sudden are closing down, which we thought would never close down. No, that's not going to close down. It's here forever. But they do overnight. So anyway, so over to you.
Well, I think that's a very valid question, and in this instance, I can't answer it because I don't have the details of the tenant there. But what I would say is that that's the kind of thing that we'd consider in the business case when it came through. You know, we'd have the accounts, we would look at the company history, we would look at things like directors and their covenant strength. What you're referring to is us assessing their covenant strength. So, I would expect the scenario that you outline, if the risk is higher, then the yield would go out slightly. So you would then have what would have been a safe UK-based company would maybe have a 6% yield, so a sort of lower rental, lower capital value that you'd pay, but the same rental yield. But then if it was a slightly dodgier covenant, as it were, or we identified some specific risks, like you say there, actually the purchase price would come down further, that would be your way of negotiating. You know, your yield would go from 6%, let's say, to 7 or 8%, and you'd pick the property up for cheaper, or rather, we would offer less. You know, if we thought that covenant strength was weaker.
Yeah, well, my point was that if they pulled out, we'd be ending up with a mortgage with no income, is what I'm saying. So it's not so about, yeah, you assess it up front and you minimise the risk. Yeah.
The reality is they would be on a lease, so they wouldn't be able to just pull out because they have a contractual commitment. What a lease does is obligate you to meet those contractual commitments for whatever the agreed period of time is. So if they've got a 10-year lease, they're obligated to pay that rent unless they have a break clause, which obviously we would reflect in our risk, but they're obligated to pay that rent until the end of the term.
And then just in terms of council process, as a point about why this approach, why this specific sector are we looking to invest or focus our efforts on, and comparatively, how is that?
I'm not saying you shouldn't, but
yeah, just why, yeah.
I'm not going to be able to answer that in full detail because I'm not from Treasury. So in terms of our area of expertise, that is property. I mean, Joy and Mark, etc., have their own financial strategy, their own treasury management strategy that already seeks to invest. The reason that we have picked this is because we are not simply looking at a revenue stream. So investing in stocks, shares, gilts, etc., will give you a secure revenue stream. What the added advantage of a property is, it also gives you capital appreciation. So at the end of that 20 years mortgage, or 25, whatever it transpires to be, you actually have a physical asset that you own, can sell, and you have a capital value as well.
Thanks, Deb. I think that's answered okay, Councillor Prosser. Yep. Councillor Hayward.
Thank you, Chair. Several questions I've got. The first thing is, I think you need to check first on policy, because 4 or 5 years ago, we set up an accommodation board and we delegated to them all property purchase to those 3 people. I had the paper here a couple of months ago, and I think it's a case of reversing it, but it was set up to get rid of County Hall. You've made a statement just now about all properties you have a capital appreciation. The capital appreciation on County Hall wasn't very great. And certainly, has there been any capital appreciation on Innovation House, which we purchased, which we own, which we tried to sell last year, and I think we were unsuccessful in selling it. But have we any idea what the purchase price of that is compared to what we paid for it 3 or 4 years ago? Third point I'd like to make is, in the report, paragraph 3, purpose of the strategy, you've got the things you just mentioned about an investment income, but it's also to support local whole place plans. So it's buying acquisitions that would strengthen the viability of the town centre and support corporate priorities, whatever that means. I don't see that they fitted in anywhere with your presentation. You certainly didn't mention it during your presentation. The fourth thing I'd like to mention is some figures that Ben brought up when he talked about, should we be looking at gilts, we should be looking at, what was the term you used, net initial value. And with the example you showed up on there, where you had a rental income of 32,000 with a capital outlay of 1.6 or 1.7 million, something like that, that also wouldn't meet your criteria, 4.5% return on investment. So I'm not sure where, using that method, it actually makes it less than the gilt return. So I'm not sure what point you were trying to make when you did that. If you just go through those first, and I'm sure I shall think of something else as well.
Okay, I'll try and address them all in turn. In terms of policy in the accommodation board, my recollection is when that got set up, it was to look at operational assets only, not investment assets. So I don't think that there would be a conflict, but we'll certainly look at that to make sure that there isn't. In terms of capital appreciation, you're absolutely right. As I said earlier in the risk, the market fluctuates. Clearly, you wouldn't want to be selling an asset at a point of a downturn in the market. You'd be looking to sell it in an upturn of a market. Innovation House we haven't attempted to sell, so I'm not quite sure where that information's coming from. We did look last year whether we could empty it to try and get tenants in there, but at this moment in time we are not in a position to empty it because we don't have alternative accommodation to actually move colleagues into, and we have actually had approaches from someone who is looking to acquire that building. We haven't actually taken that any further at this moment in time because, as I've said, we can't actually take the staff out of that building at the moment. In terms of the reference to 3.1, you're quite right, I haven't picked that up because what 3.1 does is set out what we put in the asset management strategy. Now, what we're seeking to do with this is update that and refine it to be more around financial generation. If this policy gets adapted, we would then review, which we need to do with the asset management strategy anyway, we would review the asset management strategy in accordance and align it with this strategy if it gets adopted. I don't think they're in competition with one another. Things like supporting whole place plans, we're talking about town centre regeneration there. If we acquire town centre properties and ensure that they're made available for tenants to continue to occupy that, we're not doing anything in conflict with our policy to strengthen the town centre. So I'm comfortable that we're in accordance with that. And I'll pass you on to Ben on the yield.
I'm not in control of that section. Okay, so in this scenario, we've got the going back to this, we have the rental income at 115,000, and that's before we take the borrowing off. So that does leave us with a net profit of 32,750, which gives us the 2.42. What I was trying to demonstrate there was the reference between the net profit and the target yield of 2.6%. And if we altered the purchase price, we could actually bring it in for that target yield. The other process, which we think is better, is to use the net initial yield. Now, I haven't very clearly labelled that at the bottom. It says NIY. I should have put net initial yield, apologies. But right at the bottom there, calculated is the net initial yield, which in this instance would be 8.49%. You take the capital, it's the acquisition cost. Sorry, no, it's not. It's the rental income, the gross rental income of 115,000, and you divide that by the purchase price, including any purchase costs. So the acquisition cost of 1.345, and you times the number by 100. And that should bring you back up to 8.49%.
If I can just come back on that, in doing that, aren't you neglecting maintenance charges? Aren't you neglecting management costs? Aren't you collect the risk factor you're putting in? Wouldn't a better term to use would be return on capital employed, which is what industry commonly uses, and your return on capital employed there is actually only about 1.1%, where most companies are working on figures of 6 or 7% in order to return a profit of 2 or 3% in their annual accounts. The other thing is, you mentioned that your solution, if it didn't work, is to go back to the vendor and offer a discount and say, no, I'm doing this, and presumably he also has the option to say, no, you're not buying it. So you would probably have to investigate, I don't know, 5, 10, 20, 50 properties before you found one where the vendor was willing to lower the price to something which gives you an acceptable return and which he is happy with, which is probably a property that's not very desirable, or you wouldn't reduce its price. That's my experience of the property market. What about the cost of those, I don't know, 30, 40, 50 failed attempts before you find one which is successful? How have you factored those costs in? Because I don't see anything in your figures.
Okay, what would usually happen is what we're trying to do is do an initial screen. So we have we wouldn't do any due diligence on it until we get past that. We know that it's over the 4.5% net initial yield. You're absolutely right in that it doesn't take account of the maintenance, etc. That's the kind of thing. But to compare it against the whole marketplace, the way that agents sort of advertise them is to quote net initial yield. If you pick up any commercial, so that gets us through the initial filter. We then look at the any maintenance costs, etc., in the more detailed case. With regards to agents' costs or costs of preparing the 30 or 40 cases that we'd get through there, well, actually, there's investment agents out there bringing opportunities too. If we've got a clear set of principles that we'll acquire or look at, investment agents are out there that will bring these opportunities to us as a client, an investor, which we can do our due diligence on. That's part of what we need to look at moving forward, as to, we need to build that into any purchase costs coming forward, because clearly those agents will need paying, albeit usually on completion of the deal. So I would say that that's built into the purchase costs at 5.8%. Clearly there's going to be some due diligence we need to do before that, and we'll need to take a view onto whether it's appropriate after it's gone through the initial screen. Is that what you were? Yeah.
Those are external costs. I was also thinking of our internal costs. I mean, you and Deb here must be on a six-figure sum between you. But those costs have to be factored in as well. We know that we're in a time of austerity and we are reducing officer time. You're talking here about increasing workload for your department. Your department's not overflush with people at the moment, so we'll probably see a paper a bit later on asking for another employee to come in who will be paid for out of the net initial yield. But it's, at the moment, there's a risk there of the resources. We haven't got the internal resources, and there's a cost to the internal resources that we allocate to that process anyway. And that is going to be wasted, because even if you don't do due diligence, you will certainly have to do a fair bit of work in looking at the property, perhaps inspecting the property, sending someone from our buildings department to inspect it a certain amount before you even make an evaluation of whether it's worthwhile or not.
Yeah, you're quite right. There are internal costs. They would be absorbed within the normal working environment. It's a case of prioritising your workloads as to what is and isn't.
Is that a euphemism for written off?
Well, no, they're not written off, are they? We currently fund. We're already funded. We're not asking you to increase our costs. We're already funded, so it would be cost neutral to us in terms of our times. It's just how we prioritise our time. But quite rightly, you are quite right. It does put pressure on the team that are already doing that job. But the whole point of this process is to ensure that we do not spend copious amounts of time on abortive work, and that the filters, etc., that we're looking to apply, make sure we target our efforts and our energies only to those properties that will stack up.
Sorry, Chair, just one last point. Is it morally right that we should be doing this? As I pointed out in the minutes, I pointed out once before when Kelly Byrne was here, saying we should have an investment strategy. Our past history hasn't been very good. We've got a few failures under our belt, things like Wentwood Timber. Monmouthshire Business Enterprises isn't making a lot of money for this authority. We seem to be writing off or spending internally, or whatever term you want to use for it, money every year on that. Is it right that we're competing against private industry on perhaps not a level playing field? Because the money we're playing with is not our money, it's taxpayers' money. We're borrowing from the government. We have access to a fund which is relatively safe and comparatively cheap. And we're competing against the private industry, looking for properties that they don't find attractive, but we find attractive because we have an advantage over them. Is it right, or should a county council like us, a unitary authority, concentrate its resources on providing services, which is what we're set up for? The purpose of the authority is not one of making money, it's for providing services. And should we be spending all this effort on just raising money and competing with our clients, if you like, private industry who we're there to try and support.
I don't think it's for me to comment on whether it's morally right or not. Do I think it's appropriate for us to do it? Absolutely. What we are trying to do is use investment revenue streams that we can generate to offset the cost of frontline service delivery, and the estates team already do that extremely successfully. If you look at what the estates team already generate in terms of income, their track record is extremely good at revenue generation to the authorities, in excess of £1 million per annum off the rental streams that we currently generate. So yes, we do have a track record. In terms of borrowing, we will compete at the same rate that those in the marketplace can borrow at. And in some respects, there will be pension companies, etc., that are cash rich. They will not be paying borrowing. They will be able to invest and don't have some of the overheads that we will have to carry because we are borrowing. So absolutely, I believe it's the right thing for us to do to generate income where we are able to do to offset the cost of frontline service delivery.
Okay. Sorry, go on, Ben.
Sorry, just to add that as well, the points that you highlight there, I think that's why we have to be so firm on the commercial terms and make sure that there is a security there of the return investment on, and the due diligence is done up front. I'm not suggesting that wasn't done previously, but we did, Wentwood, for example, was that done for economic development? I wasn't involved, but, was it done for economic development purposes primarily? We're not talking about that. We're talking about being focused on having, just revenue generation. So I know what you're trying to say, but it's, we were targeted in a different way, hopefully.
Yeah, and just bring it back, I suppose this is the overarching strategy as well. Every case will come forward as an individual business case, of which I'm sure we'll come on to discussing the governance around that, which is obviously going to be critical to us as members as well. And just to mention before I move to Councillor Dovey, then Councillor White, there was quite a bit of concern, I think, in the pre-meeting around that capacity within the team existing, because you're not asking under resource implications for any additional resource for this. So there is a note of caution there, I think, from within us as members, that just around the capacity that's in existence within the estates team to deliver this. But we might come on to that further after. But Councillor Dovey, and then I'll come on to Councillor White.
Thank you, Madam Chairman. As always, Bob gives a pretty good trawl through once he gets started. Nevertheless, I'll try and add a little to it on my own take, if you like. It's a bit more basic. Really, I want to question how we get into this market. Are we going to be sort of pioneering? Are we going to be out there looking for opportunities? If we are, what sort of expertise have we got to compete with private companies? Have we got a USP which will make us competitive to any particular project? And I'd like to know if there are any other councils following this sort of policy, or are we out in front again? If we are, that is a position that I don't always like. Elsewhere, I've been in companies that have pioneered, if you like, and it has cost them dearly. So I wouldn't want to be going boldly where James Kirk goes, if you like. The other thing is, if we're not doing it that way, do we advertise our willingness to participate in this market? Are we going to be encouraging developers to approach us? Again, that comes down to sifting and finding out whether the offers are appropriate for us. I think there is questions there. The other thing Bob moved into was what it's going to cost us. If we're going to do this, have we got the expertise to do it? And have we built in the costs if we grow this portfolio, shall we say? Have we got the ability to administrate it? What would be the extra costs to us? And then when we're looking at the return that we seek to get here, is our return broadly in line with what other developers seek to achieve? Or are we below or above because we've got a particular angle? And again, Innovation House, Bob has touched on. I was going to ask about that, but you've dealt with that to some extent. But the same question I would ask again, as Bob has asked, is this where we should be as a council? I know we have to find funds in some way. We have to explore other means of finding income for the council. But really, is this really the way that we should be doing it? You say we can, you're confident that we can, but should we is a big question I have. Thank you, Chair.
Okay, I'll try and respond to some of the return. Ben will pick up some of them as well. In terms, are we first to do it? No, we're absolutely not. English authorities have been doing this for quite a while, and there are a number of Welsh authorities currently looking at it. Some of those Welsh authorities have actually employed private companies to help them draft those policies. We're looking to do that ourselves because we've been looking at the policies that are already adopted elsewhere with English authorities. So no, we're absolutely not unique in this. English authorities clearly hit their budget issues sooner than we did, and a number of those identified acquisition of investment properties as one of the ways of dealing with it. How do we make contact? Well, we already have networks through agents within our area and across the bridge. We make them aware of what we're actually looking for in the marketplace, and as Ben alluded to earlier, they come to us with properties. As part of our job, we're always looking at properties anyway to establish capital values and things when we do evaluations, so we know what the marketplace is anyway. Sometimes the best properties do not even get into the marketplace. They are direct contacts through networks and through agents. So it will be incumbent on us to make all the agents aware that we are in the marketplace and the criteria that we are looking for. I didn't know whether you want to pick up on that, Ben?
Yeah, I think it goes back to your other point about are we getting an appropriate return? Well, you know, if we pre-decide what our minimum criteria is, then we know what we're going to look at. If it hits the market, the vendor will be adequately advised on what his return should be in the marketplace, as will we be aware of what we should be receiving. So your question, will we get a suitable return? Yes. We will definitely look at that. We'll look to maximize it, if anything. Your other point about USP is an interesting one as well. With the I think we do have a USP. We've sort of tentatively been approached previously with regards to some of these opportunities, but haven't had a process to go through. And some people actually like the fact that if they're going to build something and they know that the profit is going to be reused into services, then they would treat with us. I wouldn't say on different terms. They're out to make money, as it were, but it's somewhat calms their moral compass, as Councillor Hayward alluded to. So I think that was. Just to reaffirm what Deb said about us being in front. No, I mean we already run 42 industrial units. We already have a secondary retail portfolio that we run around. We know how this works, and even us, this would be adding to the portfolio that we already have. But as regards to acquiring new ones, no, we're definitely not first.
Councillor Dovey, would you like to come back in?
Just a very brief one. I think I acknowledge we have some expertise already in the portfolio that we have, but I suspect we're moving into moving into different waters here with different fish around us, if you like.
Yes, certainly. If you are saying we don't have prime retail units at this moment in some of our towns, you're quite right. In terms of managing properties, all of us come with background, not necessarily just from Monmouthshire, but from existing backgrounds where we've had the experience of other market sectors. Property is property. That's what we're trained to do. We're property professionals. If we feel that we didn't have the expertise, we would acknowledge that and we would bring in specialist expertise to support us anyway. But we are comfortable that we do have that expertise internally.
Okay, thank you. I'll move, Councillor Dovey said okay, so I'll move on to Councillor White and we'll come back, and then Councillor Evans.
Thank you, Chairman. I went through this paper and I said to colleagues, I really didn't see where you were going. I've read it. Listening to you, I can understand exactly where you wish to be, what you wish to do. My simple question, as always, is your department big enough to take on extra? I know what you do for this county, but have you got the bodies on seats to do it? We are continually losing officers all over the council, and my worry is this is going to get big if you take it on. And how many of you are there doing all the other things that you have to do that I won't mention? But this is going to take so much time and effort from your team, and I know you've got the expertise and I know you're quite confident, but you're only human beings and you've only got so many. And my worry is, are you going to be able to spread yourself thinly enough to do all the jobs you need to do and this new one? And I just feel that shouldn't you be concentrating on what you're doing more than spreading yourself thinner? Sorry, it's a simple question.
Okay, in terms of the budget mandate setting process, the expectations on the estates team to deliver more income is increasing year on year. It's not the acquisition process is the time process, so it's a front loading. Once the property has been acquired, then it fits in with the portfolio with the hundreds of properties that we're already managing. We don't perceive that to be a big issue. And in terms of acquiring properties, we're not at this stage saying we're going to go out and acquire 100 properties. We're talking about piloting it, starting it small to establish the time, the capacity that this will take. We are comfortable with what we are proposing at this moment in time, that we have the capacity internally to undertake this work. We are constantly prioritising and adjusting our workloads because the nature of property is you don't necessarily know what's going to happen tomorrow because it depends what the tenant issues are, not necessarily what us as landlords' issues are. So yes, we are comfortable at this moment in time that we do have the capacity and it will help us meet all the additional revenue targets around the investment estate.
I'm very pleased to hear that you're confident. That's all I wish to know. Thank you.
Thank you, Councillor White. Councillor Evans?
Thank you, Madam Chair. It was like music to my ears when I heard you say that if you went down this road, that you could take over properties in town centres. And I'll leave that as I say it. My concerns are you're trying to do this project and very good because you're trying to make money and all that for Frontline. But my main concern is, what about the properties we own and they're empty? Surely we should be concentrating on units we have got around, right, to fill them up. That would fetch an income in. Now, the last time I mentioned this at a meeting, they said there was quite a few around. I'm talking about Caldecott now. And they was doing all they could to fill these units up. So really and truly, if you fill them units up, that would take some of the pressure off and use that money for the front line. And I think what we got to be very, very careful about, what we are being asked, you put into us today, it's taxpayers' money.
Okay, I'll pick up. I'm pleased to report that we don't have any voids currently in our industrial units in Caldecott. because of their size, again, we're going back to this covenant strength point. We have smaller units down there. It's at the bottom of the industrial estate. It's the covenants aren't strong covenants. It's not what we were just looking at there, which is a long-term institutional. These are smaller startup businesses. So yeah, I mean, it's back to the market fluctuations again. There was a period where you tend to find trends where you get a few empty ones and then you kind of put them back in. I think I know what we're trying to do here is just acquire more prime stuff, which doesn't have that sort of turnover, 42 units in an industrial estate. Yeah, it is a bit of work doing the new tenancies, making sure the service charge is in line, unblocking the sewage systems, all that sort of stuff. We're not talking about this here, that we're talking about sort of big prime stuff that we can, for all intents and purposes, look after themselves once bought. It's when Councillor Prosser, the points that you brought, when we get voids and then what we do after those, that's when the work starts again. So yeah, I mean, I'm going off on a tangent here, but yeah, your point, we haven't got any voids at the moment, and we're working on trying to fill any ones that we do have in, say, Abergavenny with a tourist information centre, etc., etc. Those ones we're going through a marketing process to fill them.
And my other concern is, and Sue have touched on it, and Bob, is I know you do a good job in your department, and you should commend you for it. But my main concern is the bubble can only go so big before it bursts, and that bubble I can see in this authority is not far from bursting.
Councillor Edwards.
I don't think I'm as pessimistic as some of my colleagues here. I think we have before us a very experienced estates manager, Tebbs. I think you've been there quite a few years now. And Ben's been here, 4 or 5 years? So 6, is it? Yeah, they were. We've got a very, very experienced team. They've been asked to do a particular job. And there's, as Deb said earlier on, the finance team under Joy Robson are heavily involved in this as well, or will be. And I think that at this moment in time, we should be giving you every support we can. And if you come up then with a scheme which we're going to like, then so be it. I think it's early days. I think you would accept that. But you do have experience, of property which we already own. And obviously is making a reasonable return. And I noticed with down at Mill Street in Abergavenny, which I don't think have anything to do with at all, is privately owned. They have a few ups and downs, but once again, they're fully let, I think, at the moment. So they must be, it must be reasonably successful, because the amount of units now are, where a single firm has taken 2 units instead of the single one. I wish you well. Wentloog, I thought we inherited Wentloog from one of the previous councils anyway. It could have been Gwent County Council for all I know. It was around a long time, and it just wasn't functioning at the end of the day. So I'm not too, I don't think we must judge you on Wentloog. I think we've got to judge you on our existing portfolio and see how successful it has been over recent years. You made the point, Deb, that you're able to sort of introduce to the county $1 million a year in sales and income, and really it's really, I won't say shocked, it's the wrong word, I'm pleasantly surprised that you have been so successful through very difficult times. We are supposed to be in austere times, well, we are in austere times, but you have been very successful. And Ben, has played an important part in that as well. So congratulations both. I wish you well. I'm looking forward to seeing this advance to where you've got a positive scheme, more or less up and running, and continue the good work.
Councillor Hayward, I will come to you. I'll let Councillor Wintle come in first. Is that okay? Just to give everyone an opportunity, and then other members can come back in once they've asked. So Councillor Wintle.
Thank you, Chair. Do you intend restricting yourself just to town centres or sort of commercial properties, or would you consider going into, did I say it, the housing market?
There was a separate budget mandate that we looked at that we got approval for in terms of the housing market. We're not, as part of this proposal, looking at the residential sector. The reason being that, as an authority, we can't grant short-hold tenancies. Now, in order for the residential business to work effectively, you want to be in control of those assets and grant short-hold tenancies. And as part of our budget mandate process, we proposed, and it was agreed, that we would look at setting up an arm's-length company to look into those ventures. So no, not as part of this proposal. We would, of course, be looking at all sectors, and we would certainly not just be restricting ourselves to town centre retail properties. They are the ones that generate the least yield but are the most secure. But as I said earlier, in terms of spreading our risk, we would look at all sectors of the property market, or commercial sectors of the property market.
You're also not the first department of the council to go into the not an investment, but go out and bring income in, because I know that grounds maintenance, for example, are all over South Wales and in England. So you've got a good act to follow.
Okay, Councillor Hayward, over to you.
Thank you, Chair. Going back to Councillor Evans, because he asked a very good question about properties and the empty properties we had, and you pointed out that yes, we make £1 million a year, and Ben neatly turned it around to talk about industrial estates only, and I wondered how many of those we actually inherited at nil cost, because obviously it's quite easy to make a profit on something that you haven't paid a capital cost on, or that it's paid out. I was thinking more, when he asked the question, of properties like the Market Hall in Monmouth, the Shire Hall, which certainly isn't making much of a profit, Hillston Hall, which is making even more of a loss than Shire Hall. So in fact, yes, we might be making £1 million overall, but there are some properties which at the moment are an embarrassment for us, and they're just hemorrhaging money. But then I thought about, it's only a month or so ago before we all heard that we'd done this wonderful magic trick in the budget, and we'd messed around with our minimum revenue provision, and suddenly we had 1.8 million, and it enabled us to cut our rise in income tax, our capital council tax, from 4.9% to 3.9%. How does this manoeuvre affect the minimum revenue provision? Because during the budget process, we said that we wouldn't be paying back on a straight line basis, that we would pay less back now, and then future generations, our children, would pay more back because their pound would be worth less in their pocket, and therefore they could afford more of them to pay their taxes. And because of that, we can drop council tax. But would this affect the MRP that our budget was so heavily based upon?
In terms of the three assets that you mentioned at the start, they're all operational assets. They're not in our gift to control. Market Hall we would like to be using as an investment asset, but that's obviously subject to the trust discussions at the moment, as is Shire Hall and as is Hillston Park. I am sure actually at Hillston Park they would tell you that it's fully occupied, and I am surprised to hear that you think it's hemorrhaging money.
We were talking about making a profit, not whether it was fully occupied.
They are not assets that we have control of. We generate our income from investment assets, so they are not assets that we currently use ourselves for service delivery. So we are talking about the farms, we're talking about industrial units, we're talking about secondary retail. That's the income that we're talking about generating. The other point?
MRP.
Oh, in terms of MRP, I can't comment on what Joy has said. You'll appreciate I'm not from the finance section. In terms of how we have built our case, it is on straight line 20-year borrowing. How that fits into the MRP, I guess that would be a discussion that we would need to have with Joy as we develop this further.
I have a question, if that's okay, and it's under section 5.5, under the, I suppose it's around the governance in terms of how a decision will be made on a business case-by-case scenario. What role does scrutiny have within that? Is scrutiny part of that process in terms of when a business case comes forward, or does it just go to Cabinet and full Council for approval?
At the moment, we've identified that it would just go straight to Cabinet. We'd go to the Cabinet member first, and then it would go straight to Cabinet. I guess if scrutiny felt that they had a role to play in scrutinising the business case, and it could go there. But what we need to avoid is delaying the process any further than we will be doing already.
Okay. Members, are there any other questions then? I think it's pretty much covered what Councillor Dovey.
I just wanted to make one point. I wasn't being negative. I was just wanting to be persuaded, and that's all. And not ever negative about initiative.
Councillor Prosser.
Yes, we've asked some challenging questions today, and I think you've answered them well, and you've given us a bit of confidence, and you know what you're doing. And which is why we're here, to challenge you, and you've given good answers, and I'm quite happy to endorse this report and say it progresses as long as they take on board some of the concerns that we have raised.
Yeah, and I think I was going to come to that in terms of the sort of summing up around this. I think there's a sort of note of caution. Sorry, Councillor White, do you want to come in before I do?
I just remembered one of your questions was, would you rather we stayed in Monmouthshire or go outside Monmouthshire? I think, to keep it all compact, I think we should stay in Monmouthshire. You're doing it for Monmouthshire on behalf of Monmouthshire, so I think we should stay in Monmouthshire. But that's just my point, and I'd like to know what others think.
Any other thoughts on that? Although, again, I suppose it would be by a business case. It could be on a case-by-case scenario rather than just doing a formal, it has to be Monmouthshire or otherwise. Councillor Prosser?
I thought about this and I thought, well, if you're going to make money anywhere. But then I thought, if the building becomes vacant, if it's on our territory, we got control more than we would have if it was in somebody else's territory, you know, on rates and permissions and planning and all the rest of it. So on reflection, I think I'd keep it in Monmouth.
And there was the question, there's the note in there about it fitting in with our corporate strategy and our whole place plans and things like that. So if it's in Monmouthshire, it does complement that. Councillor Hayward?
I'm not so positive as other people. I think that we should be cautious, and my comments were negative. And I think we need to be aware too that what is important is reputation. And if you lose reputation, it can be very expensive. And if this council was to purchase land, say we bought the land at Wannerstow Road at the price that the land registry bought it, then granted ourselves planning permission and then built an industrial estate upon it, I think we're in danger of people criticising us and using public money for the in the underhand way, and there'd be talk of brown envelopes passing round and not getting value for money, etc., etc. And I think we need to be very careful about our reputation when we start buying properties which people could conceive we're buying for the wrong purposes.
Can I just be clear? We are very aware that we have a professional code of ethics that we need to comply with the Royal Institution of Chartered Surveyors. We are held to account by the RICS. We are paid members of that. We would not do anything, and we would not recommend to the authority anything that would breach legislation or would be against our code of ethics.
And I'm sure the Welsh Government said exactly the same thing when they sold £42 million worth of land for less than a 17 or something, and the Auditor General didn't agree with them.
Councillor Wintle and then Councillor Dovey.
Well, I got a slightly opposite view to Bob on the Wannerstow Road side. Being it's an industrial site, you could put a couple of biggish units on there, and there are firms out there who want to come to Monmouth and Monmouthshire because of the communications. So you know, it's a potential for you, but that's up to you. You know, and I wouldn't want to. My other concern is the procedures you'd have to go through to get permissions. Would you be able to keep the confidentiality of the deal within your sort of confines?
The investment strategy as we've drafted it, is not looking at speculative development. So if we were acquiring land, then we would need to be funding to build, going through that process, and that is not within the scope of the study that we're currently looking at. What we are proposing is actually acquiring properties where they're already constructed, they've already got secure tenants in place and a rental stream to go with it. Confidentiality is always an issue. We can only be as confidential as things like the FOI, etc., allow us to be. So there is always that issue, but that's the same with anybody trying to acquire a property asset.
Yes, and Councillor Dovey, then Councillor Edwards.
Thank you, Chairman. With regard to being in Monmouthshire or being out of it, my first reaction was that we should find our income wherever we can. But having said that, I think bearing in mind the developments that are beginning to happen in this area of Wales with the 3 cities, the Great Western Cities Initiative, and also the Cardiff City Initiative, with what is happening across in Bristol with the development of that area of the Severn side, and how the county is situated here geographically, I think the potential in some years ahead, not a huge length of time ahead, but some years ahead, will be really great. And so I think, well, we shouldn't close our eyes to what we could do outside, but the potential is here as well. And with regard to the performance of in Bob's ward and the Welsh Government, we don't have to compare ourselves with the Welsh Government, do we? Surely we can do better than that.
Thank you, Councillor Dovey. And Councillor Edwards. And then
It's only going to be a bit facetious and wind up the debate for you. If by any chance, Mrs Hills-Howells, you approach the Welsh Government and they want to sell you a little plot for 1.3 million, please do so, you know. You know, with 39 million, the sale price was, it was quite a bargain, wasn't it? Let's be honest.
thanks, good, Councillor Edwards.
And 4.3 of the policy says they will have a land assembly exercise, possibly.
Right, I'm going to ask for a show of hands just for approval of this report as it goes forward to Cabinet. Before I do, I'll just suggest that maybe we need to put in some recommendations that we focus on Monmouthshire in terms of where the investments should be, although we wouldn't close the opportunities elsewhere, but we'd like to see a focus on Monmouthshire. The scrutiny of the business cases should take place, so I would think that should come back to scrutiny. I think it's an important role that we have as members through our function. And to just note then the concerns and the suggestions that were raised throughout, I think what was a very valuable discussion. So members, can I just have a show of hands for those who are supportive of this? Yes, Councillor.
These recommendations, and it's going to go from you to Cabinet, would it be possible for this committee to see the proposal go into Cabinet before it goes to Cabinet, please?
Are you happy to do that just by having paper copy of it, so via email, just to see a copy of that, and then for any comments to be made prior? No. So would it be possible just for that paper to come to us, just as members, for information for us then to if we wanted to just go back on any comment, but it wouldn't go through committee?
If it's something we don't like, I'm sure we can go back to Debbie and say what they are.
Yeah. So going back to, show of hands of support for the paper with those recommendations, please. So, okay, I think that's general support then. So thank you very much for a very comprehensive presentation, and thanks members for very valuable input. So moving on to agenda item 6, which is the Q2 performance report, and I've got Richard, I believe, is going to come down and speak to us around that. We're all leaving at 4. Okay. Sorry, Richard, no pressure. Well, we've all seen these reports before, so we know the general premise and themes for it. But I'll ask Richard just to give us an overview and highlight any specific points he wishes to raise. Thanks, Richard.
Thanks for that. Good afternoon, members. I'll try and be brief. So here to present the Q2 performance information against Council's key strategic plans, the improvement plan and the outcome agreement, forms part of the committee's ongoing scrutiny of the Council's performance, and also included in the report is key national performance indicators. Unfortunately, due to delays in the busyness of your work programme, this is slightly delayed in coming forward to you. Nonetheless, I hope it's useful to you as part of your ongoing scrutiny. Within the report, I'm aware that some of the activity cross-cuts select committee themes, and this is because they focus on delivery of outcomes. In order to deliver those outcomes, it's right that there's going to be a variety of areas that input into them. So today, I ask you particularly to focus on the areas relevant to you as a committee, but also consider the wider information within the report as relevant to you. So there's 3 main parts to the report. The first main part is the improvement objectives. These are set annually by Council to deliver the Council's priorities. The update in terms of Appendix A, which is Improvement Objective 3, and Appendix B, which is Improvement Objective 4, provides the update against the actions and performance indicators that were set at the start of the year at the 6-month stage. The second part of the report, which is Appendix C, is the outcome agreement the Council has with Welsh Government, which sets activities and milestones over a 3-year period. This is the final year of the agreement, and it has been announced that the funding which has been attached to this agreement in the previous 2 years will no longer be attached to the final year of the agreement, and instead this will be rolled straight into the revenue support grant from 2016-17. But nonetheless, it's an important part of our framework, and as we see the last year of the agreement out, we will continue to report it to members, and outcome agreement 3 is attached to the Appendix C. And the final part of this report then is highlighting Appendix D, which is key national performance indicators that are set to us by Welsh Government, allow us to compare performance across other local authorities in Wales. There may be some duplication again with these in other sections of the report, but it's important that members see these as a whole to understand the indicators that are your responsibility and how they are performing, where the data is available. So I'm happy to take any questions in line with the recommendations. I'm aware that some issues, obviously, I won't be responsible for, so you may need to get further clarity back for you. And it could be this information leads into future areas of your work programme as appropriate as well. So I'm happy to take any questions where I can assist.
I'll come to you, Councillor Edwards. I just briefly say, though, first, is that we don't have a senior officer here to really answer questions around the performance, the information and the trends within this. So I understand, Richard, we won't be directing all the questions to Richard. If there's anything that he can't answer, because it's not obviously within his remit, then we'll send a letter to the Chief Officer afterwards. But I'll raise this in Scrutiny Chairs meeting, and also it's raised with an SLT that we have to have presence or representation from the senior leadership team or senior officers to answer questions around performance. Councillor Edwards.
Yeah, just one question. If you go to 3.7, which is Table 1 Outcome Agreement Scoring, we obviously hit the target there. Where are the other targets? It says here, to be fully successful, the outcome agreement must achieve at least 8 points from a possible 10 across the 5 themes within the agreement. Is there any scoring elsewhere?
So there's only one theme being presented to this committee because it's the one relevant committee. The other themes have been presented to the other committees, which gives the 9. One had one, giving us 9.
Councillor Prossam.
Well, it's a pretty reasonable result, I think. But the only areas I can see for a question is the leisure centres, slightly underperforming. I'm sure you can't answer, but what we seek is assurance that the things we are doing will claw back that underperformance. I mean, it's not excruciatingly bad, but it's underperforming against the targets we set, and targets are you try to achieve a target. So basically, we seek some reassurance from leisure centre manager or the chief officer for leisure centres to give us that assurance that they will catch up.
Obviously, they'll be able to answer that. But I suppose just to set the scene, obviously that's around visitor numbers and it is projected to below the target set, albeit the commentary they provide is they expect this to potentially increase in the second half of the year due to different bookings they've got coming in. But also I think they've put a lot of significance on things around participation figures. And we've got their participation figures from the school sports survey around children being physically active in sport increasing. So I know when I've discussed this with them previously, they've put a lot of emphasis as well as visitor numbers on actual participation rates as well. But obviously any further clarification we can come.
Thanks, Richard. And yeah, we will put that down as a question. We'd like further reassurance on those figures. Yeah, Councillor Hayward.
Thank you, Madam Chair. I'm not a very political person, and I've struggled for years and years and years with the news reports about spin, and I've wondered what spin is. And this report makes it very clear. I see that in the budget, we had a big argument about not cutting verges in the rural areas. We were reducing our cut to 1 cut a year because we were trying to save money. But I see this report says that it wasn't to save money. We are now cutting the total area of open space and highway verges that had reduced cut-in frequencies has now increased to 1/3 square metres, and it's to help the bees, so that the bees have more grass and flowers to pollinate. Where the budget was quite clearly to save money.
Councillor White?
Just a thought, and I might get shouted down. Because we're not cutting these verges so much, have we had to lay off workers? And if so, how many?
I think that's a question for strong communities. That'll come under... yeah. Further questions, members? Move. Okay, 1 second. We've got Councillor Devi would like to come in. Councillor Devi. Just to mention there, before Richard comes in, if that's okay, Richard, is we are still looking to do this committee inquiry and go on this roadshow to look at businesses and how much support they received. And I think it would also be useful to have an update on that, the Monmouthshire Business Enterprise Strategy document, which focuses on this. But that's just something to add to the work programme, Councillor Devi. I'll let Richard come back on that specific question.
So obviously, I talk about in terms of the numbers within the report, which looks at the number of new business startups with assistance from Monmouthshire Business Enterprise and partners. And at the 6-month stage, it was 87.5 jobs against an annual target of 180, and also then 57 business startups. So there's some information there which gives you some of the basics. In terms of specific details around that, again, it'll be coming from a Monmouthshire Business Enterprise themselves to give you more context around the type of business that sits behind those figures. But at the high level in this plan, those are some of the targets we set ourselves.
Councillor Wintle, sorry, Councillor Devi, is that over?
I don't think that was the question I asked, Madam Chairman, but I think we'll leave it to later as you've suggested it.
I think it might be one for the Chief Officer to respond, or someone such as Kath, possibly, Kath Fallon. So we will ask that question, and we'll do it in follow-up as well, if that's okay, Councillor Devi, to make sure you do get a response to that. Councillor Wintle?
Thank you, Chair. There's just... I've got one concern, really. It's about the Super Connected Cities Voucher Scheme. We were going up great to the target was going well, 14-15, and the main target for 15-16 was 50 sort of businesses, and actually only 11. So and it says we were behind target. Well, that's more than behind target. That's dramatically behind target. Is there a particular problem that we can know about?
Yeah, in terms of that scheme, the link there gives you an idea that the scheme has been fully committed, is now actually closed to new applicants. But I believe it's linking through on that link. It is a national government scheme. So obviously that is now closed and it is no longer available. So we've set that target, and we obviously need to consider that now in terms of what we do in the future. But again, it's probably a question for those responsible for working that scheme.
And I've just mentioned to Hazel if we could stick iCounty, the iCounty strategy, which that would probably fall under, and a broadband update. We could do with seeing that at a meeting in the very short future, near future. So if that's okay, and hopefully we'll get some of those answers. But again, we'll note that question if that's okay, Councillor Wintle, and make sure we get an answer to that. Okay. Any other questions, members? Otherwise, are we content to move this report? Yeah. Okay. And Richard, are you presenting the next agenda item, which is the risk strategy, I think, Strategic Risk Assessment 2015. Okay, if you could present that.
Thank you for that. So bringing forward the latest version of the Council's Strategic Risk Assessment, again informing the Committee's ongoing scrutiny of the Council's strategic risks. The risk assessment now is a living document. It's updated as new evidence becomes available. And you'll see, as this was previously presented to select committees in December, this has been updated when new information is available. And also in the last few weeks, there'll be further information that will, again, require it to be further updated. But it is available any time on the Council's internet site for select committee members to see those updates. The risk assessment appended has also been updated to reflect changes in the Council's risk management policy. So you will see within the risks themselves, there's now including pre-mitigation and post-mitigation risk scores, and Appendix 2 provides you with a matrix of those likelihood and impact scores and how the levels are ultimately formed. And it also includes, we hope, greater clarity around the phrasing of risks to make it clear about what the risks represent. So the risk assessment will be presented to Cabinet ultimately for sign-off, albeit it will then become a live document which will be updated with new evidence available. I'm sure members are familiar with the format now. Particular risks within the committee's remit are identified in terms of risk 4, 8A and 8B. So again, I'm happy to take any questions in line with the recommendations on the makeup of the risks and any clarity that members may have. And also, again, you may wish to use this going forward, looking at any risks as part of your work programme. So happy to take questions.
Yeah, I think we need to look at whether these are the right risks, whether any need to be added, and whether or not there's any on here that we've got specific concern about, which we need to ask a Cabinet member to come back to a future meeting to respond on. Councillor Prosser?
Yes, we've had terrible weather recently, and it's been consistent, hasn't it, over the last 6 months, really. And this terrible weather has resulted in floods, it's resulted in blocked gullies, it's resulted in roads being broken down, so potholes have appeared. We've had roads closed, affecting the infrastructure of the county, and we have to wait till we get better weather to be able to do any repairs. That's if we've got any money to do any repairs. And the repairs list is going to get longer and longer and longer. And therefore, I see climate change, because I'm sure it's associated with some of that, climate change and consistent bad weather must be placing a significant risk on our ability to react and provide sensible infrastructure and roads, etc. in our county. So how big is the risk? How big is the waiting list for potholes, etc., etc.? And what contingencies have we got in place to attend to those risks?
So in terms of climate change, obviously, clearly a big issue. In terms of the current risk register and how it may be reflected, and it probably could be clearer. If we look at risk 4A and 4B, it identifies issues around our capital programme and generating capital receipts, and the potential that spending in other areas may impact on our 21st Century Schools programme. Within that, it says in the event of emergency pressures, resources will have to be diverted due to lack of capacity in the capital budget. And it's probably fair to say that some of those emergency pressures could be emergencies from environmental situations that arise. So in terms of the financial element you mentioned, it could be that more clearly reflected in there. In terms of the risk, in terms of more operational based planning, in terms of risk, obviously this is the Council's strategic risk register. The operational based risks for the council are managed through service plans and any other operational risk assessments they have in place. I am aware that the services have risk assessed themselves against service-specific impact assessments for climate change in recent years. And again, in terms of our emergency planning arrangements and other arrangements services will have at the operational level, those risks are likely to be captured. And I suppose the question is whether a climate change risk on its own should sit within this document, or whether it should be appropriately reflected within the risks around financial implications. Particularly, we look at sort of the Future Generations Act, which I know members have had member seminars on now. When we look at more longer term planning, it could be that the evidence is suggesting that actually the risk level is increasing, and in future we could see this come onto the register. So I think we need to weigh that.
That's the question I'm asking, and yes, I think it needs due consideration for future risk assessments.
Councillor White?
Yes, when we're talking about the amount of rain we've had and the volume that comes through Monmouthshire, I have a worry, and it's not in my ward, but the Y Bridge in Monmouth takes a huge volume of traffic day in, day out. I know we're looking at it to make sure that it's structurally sound, but what if, as we've seen on the news of late, old stone bridges just giving way under the volume of water, what if that bridge went? What have we got in place to serve the people who live on the other side of that river that need to get to Monmouth and vice versa? What have we got a plan? Would we call in the army to build us one of their super bridges? What would we do? It is a nightmare thought, but have you got any ideas?
Obviously, in terms of reflecting the strategic risk register, sort of refinement of property assessments and infrastructure assessments is in there. I think what we're talking about here is more of our emergency planning and our operational based planning arrangements for that, which I wouldn't be cited on. I don't know whether it's something you may again want to further question around the risk assessments and emergency plans in place for such situations, but I probably wouldn't be able to answer on that.
Yeah.
We've got a dedicated team for emergency planning in the council, but they never really come before scrutiny, I guess. But I think we're planning that we would have a session where you can sit down and talk to cabinet members about each of the risks in the risk assessment, whereas today is about thinking about what else needs to be included, and maybe at that session it might be worth inviting perhaps Ian from emergency planning, so that if you've got some questions, you know, that might be the place to do it.
Yeah, I was going to say we'll put that as a suggestion down then, that we can invite to that time. My concern was around 8B, which is around the ICT infrastructure, but I believe if that comes under the broadband update and iCounty, we could ask the cabinet member to attend that meeting to answer specific questions around risk on that, if members are happy for us to do that. Any further questions then on the report that Richard's kindly brought to us today? Members content? Okay, so we'll move that. Okay, so we'll move that report, and we'll see that come back in terms of further assessment. So moving on to the final agenda item, I believe, if I can get my agenda up, which is the work programme. I'll let Hazel take over because there's been a few developments, and I believe we have a meeting that's been set for Monday the 22nd, which I'm not 100% sure I can attend, to be honest. So we'll discuss through that now.
Changes to the work programme are obviously that the events update, the sort of paper will come to you at your next meeting, whenever that will be. You've also asked today for a school trade report, so I've built that into the work programme, and hopefully we could bring that to you on the 3rd of March. 3rd of March, you've also got contaminated land inspection strategy, and possibly it's been suggested that we invite strong communities when you look at that as well, because the relevant crossover. You've asked for Monmouthshire Business Enterprise Strategy update, so I've put that in for the 3rd of March. And for the 14th of April, we've put in Ide County strategy and broadband update, but you might want to bring that forward if that's too late. But we've had a request for a special meeting of this committee to be organised and to invite all members, and that is to discuss the Circuit of Wales report. Some of you will be aware of this because an email was sent out this morning, but I understand the timescales are very tight because they're trying to synchronise with decision-making processes in the other authority, Blaenau Gwent, as well. So it's looking like the decision will go to full council, but they still feel it would be worthwhile taking it through scrutiny first to get members' views and consult on it. So they've suggested a sort of timescale of the 22nd, but having spoken to some of you, you say that's not feasible, and I think there are some other concerns our end that may not be the best date. So perhaps we're looking at a date after that.
I think we've got strong communities in the afternoon.
So there is a possibility of that morning of the 25th. No? Half of you can't get here. And also, I think that there might be a struggle to meet all the necessary sort of deadlines in terms of taking it through legal and finance before it actually comes to you. Because they're waiting for legal advice and they're not sure when they'll be able to release papers and so on, at the moment this was a provisional suggestion, but if it's not workable on the 22nd, perhaps we should set another one. I think the actual timescale for the council was suggested to be on the 1st or 2nd of March, so it would need to be at some point between the 22nd.
I think they're going to call a special full
I think this was going to be an additional council meeting. Is that right? Yeah, it's still up in the air because until they find out whether they can get the legal advice done in time, they can't actually fix that date. But they wanted to try and fix a scrutiny date. But it is likely that that could be something that you set and then is possibly has to be deferred.
Can I suggest Monday the 29th?
Planning? No. Okay, but...
No.
25th, I believe there's a few members that can't do the morning of the 25th. 26th? You can't, Sue. I think we're going to struggle to get a date which everyone can do now, aren't we? Because there's so much on over the next fortnight, I believe. There's a lot of specials.
The 29th is okay.
29th?
In the afternoon. When's planning?
That's planning, no.
Yeah. In the afternoon?
There's a meeting on the 29th. No, there's planning site inspections in the morning.
Is it?
Or we could do a...
There's actually a meeting of planning committee in the afternoon, is it? Okay.
Or we could do it on the 3rd. Could we add it onto the agenda on the 3rd, or is it going to be too...
That would be after the council meeting.
But we don't know what date the council meeting is, do we?
No, but at the moment they're thinking 1st or 2nd.
Just to clarify, the 23rd is for SRS and the city deal. Yeah, that's the 23rd. There's ordinary council on the 10th of March, which was moved from the 25th of Feb because of the late settlement. So that's been rearranged.
Ordinary council the 10th?
10th of March instead of the 25th of Feb. Yeah.
Why is it like that?
got our liaison in the morning.
It's full council on the 10th.
Mm-hmm.
How many people can't come on?
Madam Chair, we're not certain if legal are going to have the information to give to us, are we at the moment? So at the moment, we are stuck. We are going from date to date.
Yeah.
I think the best thing to do is wait to see when legal can release that information, which we are waiting for.
We were asked to try and set this up and put a date in the diary and then give that to legal to work towards. The 22nd's definitely out, but how... There's the 25th in the morning or the 26th, so... Okay.
Sorry. Okay, sorry to...
How many can do the 25th in the morning?
I'd be afraid to book, so maybe someone else, but I don't know if I'll be back in time. No, that's changed.
1, 2, 6.
Yeah, I can do
So there's 6 of you that can do the 25th in the morning. How many of you can do the 26th, the Friday? 1, 2, 3 of you. So it's looking like it's better for the morning of the 25th. For some of you, that'll be a long day because there's a strong communities in the afternoon, and that's the Dry Bridge one. So, Alan, you'll be needed for that. No, that won't be rearranged. Definitely. So, are you happy to go with that?
Yeah. Okay, let's...
25th in the morning, 10 o'clock. Pre-meeting 9:30. Strong Communities is at 2, pre-meeting 1:30. The Circuit of Wales, although there's 6 of you from this committee who can make it, we'd need to extend the invite to everybody, so...
10 o'clock.
Yeah.
Okay.
All members.
So that's a special on the 26th and then our ordinary meeting on the 3rd.
Yeah.
Next 2 meetings.
It would be a meeting of your committee, but you would invite other members to come and partake if they want to. Yes.
Yeah. Sorry, Councillor Evans. Yeah, and Councillor Prosser as well. Prosser blame. Okay. Is there anything? You'll all have had a chance to read the cabinet work programme. Any issues with that which you want to see raised? I haven't seen any. Nope. Okay, so to confirm the date and time of the next meeting, it is the 25th at 10 o'clock. Thank you, everyone. Thanks.